We have with us Mr. Prabhu Rangarajan, co-founder M2P Fintech. And joining Mr. Prabhu on stage, may I also please invite both of our esteemed leaders as well. May I please invite Mr. Nitin Chugh, Deputy Managing Director and Head Digital Banking and Transformation, State Bank of India, and Mr. Harishankar, IBM Fellow, IBM Quantum Safe and Vice President, IBM. Ladies and gentlemen, can we have a round of applause, an attentive round of applause from our members of the audience as we keep the energy and the momentum on for the rest of the sessions and for this session as well. Thank you so much for joining us. Thank you, sir. And with that, let me smoothly hand over the proceedings to Mr. Prabhu Rangarajan to take it over from here. Over to you, Prabhu.
Thank you. Good afternoon, gentlemen. Thanks for being here. Thank you to the whole GFF team. This has been a massive, event. It's just getting bigger and bigger every year. So amazing. And I think this topic, it's pretty relevant to the whole theme of this year's GFF. Responsible AI is the theme of this year's GFF. And how do we bring in more inclusion, connect more people and do it responsibly. That's the whole theme of the, the whole event. So I'm sure these are two stalwarts of, in their own right, in each of their industries. Ray is an IBM fellow, and he's been doing deep research on quantum computing. So I'll rather start this session. I would request Mr. Ray to kind of give an intro or a quick peek into the world of quantum computing. I'm sure most of you would have heard about this phenomenon, but just the basics of quantum. What do you think quantum is, and how do you think it can help us? How do you think it, and every technology out there which has been, if it has a phenomenal effect on the people, it better changes people's lives, right? Like that's the outcome that we expect out of every technology. So how do you see, what is quantum, and how do you see quantum computing change our world in the near future?
Thank you, Prabhu. First, this is my first time to this event, and I am amazed at the presence here, the number of people, the kind of breadth and depth of topics. It's awesome to be here. So I hope you're feeling the same level of interest and enthusiasm that I feel as I walk the halls. So this is, again, great to be here and appreciate the invite. There are a lot of things in the questions that you just asked, Prabhu. So let me just unpack that a bit and see how I can simplify this. I know that the audience isn't going to be familiar with what quantum computing is, so let me start with that. And I'll try to simplify it in such a way that maybe you can relate to it. And I will connect it to fintech and finance and insurance and the impact of that. And hopefully at the end of that, you're going to feel an appreciation for what quantum computing is, but also be aware of the impact it can create. So the simple way of describing it is, I'll start off by saying what it is not. It is not, quantum computing is not faster classical computing. It is a completely different paradigm of computing. If you were to, I'm sure that all of you are aware of zeros and ones, bits. So think about it as an on-off switch, where there are two positions in it, on or off, 0 or 1. Whereas in quantum computing, you can think about it as a dimmer switch, where it has a 0, where it is dark, and then it has the other extreme, where it is fully bright, and then a number of settings in between. So instead of 0 and 1, you have 0, 1, and any value in between 0 and 1. That is what we call a qubit. So when you have bits with 0 and 1, you have qubits with 0, 1, and a value anywhere in between. So you can take 3 values or any number of those values in between. So therein begins the difference. And as I said, quantum computing is not going to any time replace your laptop or your server that you have in the office. It will always work in conjunction with that. So this quantum computing is based on certain, quantum mechanical and quantum physics properties. I won't go into that because that's a little complicated. And you might say, okay, fine, if I understand qubits, then what can I use it for? Why is it more useful, right? So we, as from IBM and Google and several other companies, are into the business of building quantum computers, right? So these are computers that are capable of managing these qubits and use them for computation. Very much like how you would use a classical i86 chip or whatever it is to figure out certain problems, right? But quantum is never going to do your payroll. It's not going to do your retail banking. It is not going to do a number of things that you would come to expect. There are certain kinds of problems that quantum is extremely good at solving. There are problems that classical computing simply cannot solve because algorithms don't exist. The mathematics or the science behind it doesn't allow it. And I'll talk about one of those. So factorization, for example, is one of those. So factorization is simply saying, if I gave you a number 65 and said, tell me the factors, immediately we say 13 and 5 as two possible numbers that you multiply to get 65. But classical computer does not have an algorithm to find that out, whereas quantum computer does. Why is it important? Hold that thought, I'll come back to it. That's one use case, right? There are other cases where quantum is better at solving things that classical computer does solve today. Case in point, optimization in general, portfolio analysis, fraud detection. These are all, and performing customer analytics. These are all things that classical computers do today, but they have certain limitations. Quantum can do it better. Quantum can do it much faster, right? So now let me bring it home and talk about examples where you can relate to, primarily being from the financial services industry. I kind of touched on it, fraud detection, right? So fraud detection models are usually plagued by false positives. And there are techniques and algorithms in quantum that will allow you to reduce the false positives by applying quantum machine learning. So that's a proven example that you can apply or begin to learn how to apply. Then there is risk analysis or your capital management. How much capital should you have as a buffer? And that's typically a problem that you solve right now in using classical computing. But because of the efficiency of quantum computing and the algorithms that are good at doing it, you can do them better. So you can afford to do with much better buffer for your capital. I talked about portfolio analysis. That's an optimization and portfolio analysis is usually a multi-objective optimization problem. You have certain number of parameters. You have to balance against that in order to arrive at the right balance for your portfolio objectives. Classical is good at doing it, but it assumes, it makes a lot of assumptions and in computing that. With quantum, you have a large capacity to manage multiple objectives more accurately at the same time. So your model definitely comes out looking much better. Now, I can go on and on about a number of these use cases where you can apply specific algorithms that are very good in quantum computing that you can apply to banking. And you may say, who is using all of this, right? There are a number of companies that we are working with that have started to work with this, and many of them obviously don't want it to be public that they are working with this, but nevertheless, the ones that are openly publishing papers and talking with us are HSBC, Wells Fargo, Truist Bank, Credit Mutual. These are all institutions that are working with us in developing solutions based on some of these use cases. So I know I've rambled on for a while, but hopefully you have a pretty good appreciation for what quantum computing is and how it is applied in finance. I'll make one last point and toss it back to you, and then maybe I can pick up this point later on. I did talk about the fact that there is factorization is a use case that I'll come back and talk to. That is actually a real problem that every one of you should be concerned about, right? I don't know if you want me to go into that now or you want me to go into that later as part of responsible quantum computing.
Sure.
But I don't want to hog the conversation. I do want to have you listen to Nitin as well.
Sure. So we'll double click on it. Thank you, Mr. Ray. Like it was definitely very interesting. I know this is post lunch session, so most people who were kind of half asleep would have definitely woken up to a new concept. So I'll probably touch upon a topic that we have all of us have been discussing for the last couple of years, especially after the advent of ChatGPT. Everybody keeps talking about AI. Mr. Nitin Chugh, you've been responsible and you've been carrying the mandate of digital transformation for SBI. SBI needs no introduction in India. You service almost every pin code out there in India, length and breadth of the country. What do you think are areas where AI is helping you transform the bank and the lives of the customers that you service? And what do you think about, like, few words about quantum computing as well? Yeah.
So thank you, first of all. And it's actually an honor to be sitting next to Ray, who's got 25 patents to himself. And he just shared with me that his target is 1 patent per year of years spent at IBM. So it's really an honor to be sharing the dice with you, the stage with you here. I think in AI, the way we've looked at it, we of course moved from traditional AI and now we are experimenting with generative AI. But along the way, we also found and realized that we need to put the guardrails in place, because anything that needs to be built on top of a foundational model, even if it's core banking, basic principles of lending, or let's say portfolio analysis, fraud management, fraud prevention, etc., the guardrails need to be put upfront. You can't, as an afterthought, come back and say that I wish I had done that, because accidents do happen. So what we've done is to create a framework, and it's been around for almost 6 years now. We call it the overall responsible and ethical AI framework, but in practice, it is called FEAT, fairness, ethical, accountable, and transparent. And each one of them have several set of subpoints to go through before any model is deployed. So what are the key things which are required? And I think the same discourse will also get carried forward to quantum, and since Ray works extensively in the quantum safe space, I'm sure the principles will generally remain the same. So things like explainability. Now today there is ability to explain an AI model, but the model has to be built in a manner that it can explain itself to somebody who doesn't understand why the outcomes are what they are. It needs to be ethical, it needs to be transparent, it needs to remove all biases. If there are biases, either the model should self-correct. If it cannot self-correct, then there has to be a human in the middle. And today we prefer a human in the middle sort of a model. We prefer an oversight where our people are able to look at these models, calibrate them, and as and when any kind of a model drift happens, which happens over a period of time, there is an ability to pull it back through a recalibration process. So in fact, this has been coming up even in the industry conversations, starting with the RBI governor, talking about this about a year ago, saying that there should not be excessive dependence on algorithmic lending. And I think we have been trying to make sure that we are not excessively dependent by just making sure that there is a good amount of recalibration that takes place periodically. Now, what we haven't done is yet, and which is what we are trying to do, is to how do we automate that? And at the same time, because we are also dabbling with generative AI, of course, like everybody else, I think we share the same classroom, so our knowledge is no better than anybody else. Maybe especially maybe the people who are working on the tech side, of course, know a lot better. But as practitioners, I think we are as literate or illiterate. But I think what we are trying to do is to again build generative AI-based models using the same principles, because generative AI can be even more riskier. And what we are learning now is that there is an intersection of quantum and generative AI, which is now coming about. And it can either be very potent in a positive manner, or it can also have very, very negative consequences. In fact, as I was preparing for this, to come and speak on this panel, I also found that now there is another thing called biocomputing, which has gone from physics to biology. So quantum was all about physics, but now even biology is coming into this whole space. So I think these things will happen, but the principles will always remain the same. Banking is about prudence. Banking is about making sure that you don't take risks that you don't understand. And AI is just a way to deliver to that. And I think our principles, our value systems completely reflect that. And any responsible bank would be no different in terms of making sure that what they produce with AI or what they use AI for follows exactly the same principles.
Definitely, sir. Thank you so much. One key tenet that most large companies want to kind of do is to make sure the most deserved but underserved communities are served well, right? So the beauty of a great technology or a phenomena is to make sure like the last mile delivery of a certain service, if it is delivered digitally, it kind of aids or it helps the the most deserved category of people, right? Have you seen AI helping in the whole inclusion story or reaching out to the last mile story? Have you ever seen anything or experienced any?
Yes, absolutely. So if you look at the traditional wisdom of banking, it relies a lot on experience, which is bad experience, right? So you say that loans in this area, you tend to go bad faster than some other places in, let's say, a downturn. Or loans from, let's say, this category of professionals are more riskier than the others, okay? But these are old nuances. Today, I don't think people practice that as a principle anymore. If somebody does that out of, just the fact that they have limited capital to use, that's a different situation altogether. But these principles have now been kind of left behind a lot because there is an ability today to use data science to have a far better precision in identifying even the excluded set of people who otherwise would have been excluded with a broad brush. You can identify capable people, good people, better people, rather than saying that, this whole area is a black-red area for me and I will not enter the perimeter of this area. So those days are over. I think most lenders, not just banks, are taking very, very calculated steps into that kind of a domain to say that, okay, my data science is telling me very clearly that these are the 50% people that I can deal with. And the next 50%, maybe we need to go through a certain process and a journey to bring them up to that level, which is part of the whole financial inclusion, financial literacy, et cetera, et cetera.
Great. Thank you so much. Changing gears back to quantum as a topic, Mr. Ray, like if you could touch upon some of the use cases or some of the efforts that you are doing in partnership with large enterprises who you're already working with, maybe some of the avenues that you're taking to see how can it, help transform the, current computing world.
So to pick up on the point that Nitin you made about responsible AI and the overlap with responsible quantum computing, we at IBM have come up with 5 principles, if you will, that we call as part of responsible quantum computing, right? And simply put, responsible quantum computing is quantum computing that is aware of the significance of the power as well as the effect it has, not just on the enterprises, but on a community as a whole. So the first thing our principle is it needs to have significant societal benefit. So we are not doing it, and that is the challenge with any new technology, right? If it's not managed well, then it has the potential to cause significant unintended consequences, right? So we are aware of that and want to avoid it. And talking about use cases, the second principle is we want to make sure that the use cases that we explore, or we explore them with foresight. What we mean by that is we need to be aware of what the outcome of that intended use case could be, because technology by itself is neither good nor bad. It is how you apply it and what you apply it for that makes it good or bad. So we want to make sure that the exploration of these use cases are not for nefarious purposes, but for the overall good. The third is there is such a lot of hype that started off, and Gen AI is a great example of that. So we are keen in calling out that we need to represent the capabilities of the technology appropriately. Not hype it up, not keep it on the low as well. Be factual about what it can do so folks are aware, right? And then the last couple ones are about making sure that we make principled decisions in a consistent manner, that we cannot change the way we make decisions. We lay down some principles, and we are guided by those principles in every decision we make. And that has to be consistent. Otherwise, there's chaos, right? And the last one is to the point you just made about how does it benefit the community, right? So we want to make sure that quantum computing is available to all the community out there. So we are keen in building a very inclusive and diverse community of people who can take advantage of it. So one of the examples, in fact, you'd be surprised to hear that India has a lot of quantum computing. We have this product called Qiskit. It's actually an open sourced piece of software that you can go in and learn how to use quantum computing. India has the most number of people signed up, right? And then there's a lot of quantum startups here as well. And there was a recent World Economic Forum study that came out about the quantum economy. And in that, it calls out Telangana state as one of the examples where they're calling out that they have, it's a case study of how well Telangana is doing in terms of making innovation, open innovation available, and how it reaches the masses, and how that is progressing well in that space. So my point is there are a lot of local examples on how innovation in the quantum space is being consumed by not just end consumers, but also being a fostering location for startups and the while. Now, you did ask about the benefits. I talked about a lot of enterprise level use cases, but at the end of the day, all of them have to end up benefiting the common consumer, right? So there are no direct use cases yet on quantum that will benefit a single customer. But if you think about fraud detection and your ability to do customer analytics in a more effective way, does have an indirect way of benefiting the clients at the end.
Perfect. So, and in fact, the whole way in which current underwriting models for when I spoke about financial inclusion, one of the key aspects as part of the inclusion is not just to connect people having a bank account or a way to kind of have access to financial services. It's also about how do they participate in the economy by being able to borrow money, and if they need to borrow money, the regulated institutions need to be able to kind of underwrite based on certain data sets. And for some of the segments of the society, these data sets aren't readily available. And if you have to kind of filter through and get access to these data sets, it's like basically trying to find a pin in the middle of the ocean, right? Like, so it's so vast. So I'm sure like once quantum and the technology catches up and matures, there will be enough and more avenues to kind of do large scale, data filtration and stuff like that. Now, changing gears back to AI, Nitin sir, I'd like to bring you in on one key aspect which is pretty core to banking, which is trust, right? People entrust the banks to safekeep their money, and that's how the whole economy works, right? Like, so how do you think, in your personal experience, professional experience, how do you think AI can come in and add to the level of trust that the customer has? Will it be possible for customers to see more transparency from the banks? Or what kind of steps do financial institutions need to take? And probably you can even bring in the angle of how a regulator would like to think, because you work very closely with the regulator as well. So what's your take on how the whole factor around trust, will people start trusting banks more with the advent of AI and quantum? Or do you think it's going to get diluted? Or what's your take on this whole trust as a topic?
See, I think the bedrock of trust is inclusion. If you don't include somebody, that that somebody is not going to trust you. You can't go and say that I don't want to deal with you, but please trust me. So I think that problem is being solved now. So since we are an exclusive large bank, we've always enjoyed the trust of, we have 500 million customers, so we do, they have reposed their trust. Now we believe that their trust is certainly for safekeeping. There was a time, and this is not specific to SBI, but across the industry, when all the banks were introducing their digital apps or even web portals, it started with the position of not trusting it very much. I trust the bank, but I don't trust the application. Is the bank going to guarantee that the application is going to deliver everything in just the same secure way, like my money is safe? And accidents have taken place and they continue to happen. So when these things happen, there is a bit of going forward and coming back for sure. People, take 3 steps forward, come back 1 step, and of course there is usually this whole thing about if you lost money, then why would you ever want to trust? And everybody knows somebody who's lost money these days. So I think it's a difficult problem and an ongoing problem to keep assuring that your money is safe in the bank, but the way you access the bank today, how are we making it more and more safe? And that is where I think some of these new technologies are going to be helpful. But one of the worries that we have now, and I think that is again something that we see happening across the world, is that there is hoarding of information that is taking place, which today might be encrypted, but later when quantum is available, quantum can go and crack that whole crypto, the existing crypto, all of that will get exposed. So we need to start preparing for that. If that happens in the next 5 years, it is very, very worrisome. If it happens in 10 years, hopefully we get a little more time to prepare ourselves. But then that is again the reason why we need to invest in some of these new technologies, and especially the place that Ray works for in making quantum safe. Those are the places we're trying to understand, because today they might be okay with, let's say, AI delivering to a certain level of personalization, and that is all right for them. And they don't quite care that, that it is increasing my safety or reducing my safety, because it's really not doing anything there. It might alert them, for example, for something which is fraudulent is going to happen, which is again more of a pattern detection, but that's all right. I think most people have got used to that. But to take it to a level where your entire credentials can get compromised, because that whole cryptography can be broken through quantum computing, and we have seen examples of that. And RSA, for example, was what everybody has used for the last 2 decades, and today even that can be broken. So I think before it becomes mainstream, before the bad actors get hold of this, we have to move faster and make sure that we find a way to keep people aware, while the producers of technology like IBM will make sure that computing is safe. But how do you keep the users safe? Because user has still not got access. Like Ray was saying, that there is no use case at the user level. But imagine if, let's say, this is going to be offered as a cloud service in future, and the computing actually takes place on your handset, on your smartphone, and that has the ability to either create a compromise or reduce a compromise. We will have to start preparing for that. So I think one of the things at least we've started to do is to also get into a lot of research. And we do have a partnership with IIT Bombay where we've set up a hub for data science and analytics. And we are trying to research on some of these new technologies, so at least we form a view what we should be doing. Otherwise, it is not something you can go and pluck and buy and say that, oh, I bought an application which is going to keep my cryptography safe.
Absolutely. And you touched a very, key topic. This is called as post-quantum cryptography. It is actually, I would say, it's largely a threat that we foresee. When quantum computing can do, as Ray mentioned, it can do many, many mathematical calculations, arithmetic operations very, very quickly. The whole world of cryptography is based on the fundamental arithmetic is where is on top of which the entire cryptography is based on. So the encryptions and the strength of encryption that we have today, you would have heard about RSA, you would have heard about AES 256, AES 512, all of these terminologies are being used, but it will be meaningless when quantum computing is able to kind of process it and crack it in a minute or two. Right? So all the encryptions that we have today to safeguard our data will be meaningless. So how do we prepare for it? Like I'm sure you would have worked quite deeply in quantum safe, as that is your main area of what do you call like focus. How do you what's your take on this whole post quantum cryptography?
Well, I think that is a here and now use case of quantum computing that many are unaware of. And so thank you for the question, and thanks for the opportunity for me to sort of scare you a little bit, because that is what's going to happen. So going back to the trust, the word of trust, right? We trust every digital communication that we send, whether it be email, your airline booking, or your shopping, anything, any digital transaction that you send. You trust that nobody else can eavesdrop and listen to it because it is encrypted. Right? Very simple mechanism. And it's even more simpler when you really think about how the heck does that encryption work. And that encryption works on the point I made earlier about finding factors of a number, right? So finding factors for a number like 65 is fairly simple. We can do it in our head. But if I were to give you a 637-digit number and say, find me 2 prime numbers that you have to multiply to arrive at that, that is what RSA 2048 is about, right? It's impossible. I say impossible because there is no algorithm that exists in classical computers. You can put the most powerful supercomputer to work at it. It'll take 1 million years, and it's hit or miss whether it'll have a problem solved or not. It is that very simple math problem that all encryption pretty much depends on. There are derivatives of that, but this is the fundamental problem, right? Until a guy called Peter Shor in 1994, without even having a quantum computer, came up with an algorithm to solve this using quantum computers. So he says, oh, if I had a quantum computer that would do this and that, I can solve this, right? And he has. So now what happens is when you have a cryptographically relevant quantum computer, what do I mean by that? A quantum computer powerful enough to break this RSA encryption. Because right now we have quantum computers that have been shown to break RSA 12. For example, meaning a 12-bit RSA code can be broken using Peter's algorithm. So we know the algorithm works. But it gets exponentially difficult as it gets larger and larger. So you're safe for now, but not for long. When such a powerful computer becomes available, it will break all encryption that you're currently using. What does that mean? It means your digital signatures can be compromised. I can fraudulently authenticate myself as you. All your blockchains become broken. Any digital communication that I can intercept, right now I cannot do anything with it, but with a broken key, I will be able to unlock that and look at what communication you have been sending. So there is a problem that exists here and now, I said, and that problem is called harvest now and decrypt later. What it means is, let's say I'm able to download a bunch of encrypted information anywhere, right? I'm sitting outside a cafe near a sensitive location, whether it be a financial institution, whether it be defense location, doesn't matter. Let's say I'm able to intercept and download the data. Now we are not worried because nobody can unencrypt that, right? Nobody can take a look at inside, so it's safe. But if I were to store that and sit on it for 10 years, and then a quantum computer becomes available after 10 years, now I can unencrypt it and see what damage I can cause. So I'm harvesting the data now so that I can decrypt it much later to cause damage. Trust me, bad actors, typically bad state actors, are doing that today. So information is being exfiltrated, and we just don't know that it is being exfiltrated because no harm has come because of that yet, right? So this is where I'm saying I'm going to, scare you because it is a concern. But at the same time, you may say, wait a minute, I don't see a quantum computer right now, so I don't need to worry about it for a period of time. You are correct. But if a quantum computer becomes available in the early 2030s, that is where we predict, that is where a number of pundits and other organizations are predicting that a viable quantum computer capable of breaking encryption will become available. At that time, bad actors can break this code and decrypt the data. So if the data that you have has value over 7 to 10 years, then you need to worry about it. I mean, credit card information, for example, you may not have to worry about it because you can change that in a relatively short order. But if you have longer information of longer duration, I'm sure there are financial data that is really sensitive that has longevity over 7 or 10 years. You really need to be concerned about the safety of that. So the point about quantum safe is identifying where you're using current cryptography. you mentioned RSA and other mechanisms. RSA was, I know, discovered in 1976, if I remember right. It's that old. It's nearly 50 years old, and we are continuing to use it. I guarantee you, you don't even know where you're using RSA in your software system. It is that old, right? It's embedded somewhere deep. But now you have to go rip it out and replace it with post-quantum cryptography, right? And those new algorithms exist. NIST just 2 weeks ago announced a set of algorithms that you can use in place of current algorithms. Instead of RSA, you can use new ones that will work in this space. But it is a lot of effort to go and identify where you are using these algorithms and then replace them with new ones. So that is where you have to get started now. If you have any prayer of completing this work in the next 7 to 10 years, you have to start now. Because we recently did a study that average CIO, I think we surveyed over 100 institutions across the world. They said it'll take them anywhere from 10 to 14 years to do this transformation. But guys, we don't have 14 years, right? People are improving Shor's algorithm, rather frequently now. And so what used to be, 2035 is slowly left shifting, and now we are talking about early 2030s. And I think the most aggressive one was Gartner, who called out that 2029 is when they expect something bad to happen. So I'm not here just to scare you, but also to say that you need to start preparing now. So it's not like everything is lost, but if you don't prepare now, chances are you are going to have a major problem that you need to deal with and not enough time to deal with it.
Thank you, Zirag. That's eye-opening for sure. Mr. Nitin, I'd like to probably, I think we have a few minutes left. So I thought of hearing from you about a key aspect with all the technologies that we spoke. The key part that this becomes meaningful is how iterative it is and how soon are innovators able to catch up to these technologies, whether it is AI or quantum. You can pick and choose any one of these topics. But where do you see innovators participating in this whole game? How quickly do you see the iterations would probably get shortened? I'll give you a live example, right? Like back in those days, like when computing, or I would say computing became mainstream in banking. This was 2.5 decades ago, when in the whole of 90s, we started computerizing the whole of banking, from core banking systems to ledger systems to all card management systems to everything. And then within a decade, we started seeing the innovators participating and new products coming out and various versions of digital products that are based on the digital framework coming out. And here we are now. We have the whole success story of UPI helping us, even the street vendor or flower vendor to participate in the financial ecosystem. So, but the innovation cycles or the iterations have actually come down. Now we see within a couple of years, things of order of magnitude way higher than the previous version getting churned out. So how do you see this in your experience?
See, the people who start first, largely the people who work on the tech side, they will usually innovate at a core capability level. They will create those platforms, the core capability, on top of which an ecosystem will start thriving, which is what we're seeing with payments and UPI, that now the whole innovation is happening at a interface level, use case level. Okay. Now that is much easier because you have a foundation which is already there, and somebody has done the hard work of thinking about it and innovating around that. So I think the way we look at it is also both in terms of building long-term capabilities, which will help us in spawning off, as many use cases as we want, not restricting ourselves to just a low-hanging and depending on a core tech that's been built elsewhere and you just license it. But work on both tracks, use the learning cycle to learn about a new technology through use cases, but at the same time, on the second track, invest for the long term. If you really believe in that technology and you believe that, yes, this is really going to be mainstream in future. And for that matter, it has to start with a whole lot of academic research. Because if you're not researching enough, then what is the whole point of saying that, and today, most of the research that happens in businesses is about market fit and, whether this product is going to work or not, whether users are going to accept it or not. But the technology itself needs to be researched. And that is the part I think we believe very strongly in. So a lot of through our own academic faculty in the bank and our partnerships with the academia, we spend a lot of time and resources just in understanding the themes that will emerge in future. And even if half of them are not going to be practical enough, at least we are knowledgeably discarding them to say that, yes, we examined it, it will not make sense. Now, on top of that, it's easy to build a platform. On top of that, it's easy to say that, okay, let's start innovating now. That's how I think we would look at it. And for that reason alone, I think there is a case for a lot more deep tech innovation in India, which many people have spoken about in the past also. But that is really what we need.
Wonderful. I'm sure we can keep talking about these topics on and on, 40 minutes for about, two very, very futuristic topics is like too less, but, in the interest of the time of all of you, we are coming to a close, but maybe we can take a couple of questions if that's possible. Any questions from the audience to these gentlemen? Yeah.
Yes.
Thank you. Hi, my name is Diksha. Thank you so much for giving me this opportunity to listen to Ray sir and Nitin sir. I missed the initial bit of the trialogue, I'll be honest about that. So I'm a solutions architect with a company, and my question revolves around solutioning itself. I know quantum computing itself is very in the initial or in the research phase right now, but how do you see that getting factored in the production state of, let's say, banking and financial institutions? And then since the financial world itself is of a quantum nature, like every single factor is so codependent on the other one, and it's so sensitive at the same time, then how do you see the sensitivity of the financial world getting incorporated into the sensitivity of the quantum world? Because as we're incorporating more and more machine learning, quantum computing is going to be need of the hour, and that was also sort of my research as well when I was doing my MBA. So just your bits around those aspects would be helpful. Thank you.
I could catch most of your questions, so if I don't answer your question, come back and catch me after the meeting.
I will.
I'll be happy to do that. Quick answer is, when quantum computing becomes much more mainstream, how do we deal with it, or when will it become that, and how does financial institution take advantage of it, as well as the data sensitivity considerations around that, right?
Yes.
Perfect. So one thing I failed to call out is that right now, IBM has about 120 quantum computers available on the cloud for people to use, right? So in other words, it is, I would call, mainstream, but the kind of problems you can solve with it are fairly small, right? So that's the reality of it. And the number of banks that I called out are doing experiments with it so that they can come up with algorithms that they can apply to begin taking advantage, because I guarantee you that their ability, for example, to do better portfolio analysis or better fraud management will become a differentiator in the marketplace when a few years from now, quantum becomes much more mainstream. So we predict that by 2029, we will have a number of business use cases that can be executed in quantum computers. So 5 years is not a long time for us to look at to see when it will become mainstream. The other point about data sensitivity is a quantum computer will never operate on its own. It is always going to operate in conjunction with a classical computer, in that you submit a portfolio analysis workload to a classical computer. It does what it needs to do, passes on a certain part of the problem to quantum computer to solve, gets back the results, and continues. So that way, any data considerations you have that are handled by your existing data center and classical computing continue to be supported within the quantum world as well.
इसके ऊपर तुम मुझे कुछ नहीं बोल सकते, मैं कुछ नहीं कर सकती तुम्हारे लिए.
Now, if you want to hear more about this, a shameless plug, Marianne and I are doing a master class on quantum computing and its impact on finance, particularly payments, at 11:40 a.m. tomorrow in room 202. There's one more question at the back.
Just an extension of that one. So how do you think?
If you could excuse me, sir, you can catch him up
I will,
offline.
I will.
Yeah, we'll
No
just take one last question and then.
One person behind
Yeah.
you.
Yeah.
I think I'll catch her later on.
Hello. I'm Sharpal. I had a doubt when you mentioned that quantum computers can do a lot of calculations very quickly. And I'm asking this because I'm a machine learning engineer. And primarily, when it comes to training a model, it takes a long time to train a model, right? Because you need to go through a multiple sets of calculation. So when it comes to leveraging quantum computers, and if they're allowed in the hands of people, would it be detrimental because they can train machine learning models now? Because a lot of machine learning models are restricted, or there is a lot of regulation coming in for use of AI and machine learning. Now you're giving them potent solutions wherein they can train their own model where regulation is not going to be enforced. So just wanted to know where we're going to head with respect to that.
The whole topic of regulation and quantum computing is a separate chapter by itself. There's a lot of discussion that has been going on. And again, I go back to a World Economic Forum report from 2022, if I remember right, where it talked about regulating or regulations in quantum computing, right? So that's a sort of a reference that I can point you to. The other is, I didn't quite catch the question about machine learning, but we can talk about that separately outside. But the simple thing is, quantum is good at doing certain things, is what I said. Quantum is good at doing division or factorization, but it is very bad at doing multiplication. So there are certain things that it does well, but with respect to machine learning, it can do QML or quantum machine learning quite effectively for certain types of problems. So it is not one size fits all where you say, anywhere I can do machine learning, I'm going to do much better with quantum machine learning. If you can do fast Fourier transform, for example, just to complicate the message, quantum does it better, but there are certain things it doesn't. So it's not anywhere you can apply AI, I'm now going to apply quantum and make it better. Not quite as simple as that.
Great. Thank you so much, Mr. Ray and Mr. Nitin. I'm sure we would love to continue, but I think in the interest of time, we'll probably end this discussion here. But thank you so much for coming in and giving your, sharing your wisdom here. I'm sure it's been a long journey for you. You just landed yesterday. And Mr. Nitin, thank you so much for coming here. Thanks for all the views and your suggestions here. Thank you so much, everyone.
Yep, thanks for the opportunity.